Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for the segment, we have Scott Nations, president of Nations Indexes, to discuss if recent rallies in equities are to be trusted. And Scott, this is such a great day for when we're seeing not only the Nasdaq-100, but all the indexes up well over 2%. And I guess the question is, has anything changed fundamentally, or is it just because things were so oversold?
I think things were really oversold, Jill. And I also think there's more than a little bit of relief that it looks like the problems in the financial problems in the UK are going to be resolved. You know, it's never a good thing when traders start to wonder about what is going on outside the United States, because it's always a problem. So we got through the weekend. It seems like that's going to be resolved. We feel pretty good. We feel pretty optimistic about the earnings season that's going to unfold. But also, Jill, you know, we've seen this happen before. We see a big spike in rates. And recently, the 10-year has been up to 4.08%. And then it pulls back. And right now, the 10-year is just a tiny bit below 4%. And so everybody feels better about everything, and they start buying equities. Jill, the problem is we've seen this before. We see all this kind of fake rally in equities from mid-June to mid-August. And then the same thing happened. Rates increased again, and that rally fell apart.
Yeah, I also think the velocity of the rallies, and even when you see those big days to the downside as well, it doesn't suggest that there's more normal market activity, if you will, when you have these 1%, 2%, 3%, 4% swings, particularly when it's even an intraday session. When you look at the volatility complexes, particularly the VOLQ, the Nasdaq-100 Volatility Index, does it suggest that there will be more of this chop?
It does, and we know that as traders, we know that when markets get volatile, they tend to stay volatile. And when they're quiet, they tend to stay quiet. But that means that people can look at VOLQ and they can use VOLQ derivatives, either the futures that trade at the CME or the VOLQ options that trade on NASDAQ, and use those to hedge a portfolio, because if markets continue to stay volatile, then owning some sort of volatility derivative is not going to be as expensive as it might otherwise. And this makes a lot of sense right now. Again, you know, Nasdaq-100 Index is having a great day today. Great day, no other way to describe it. But the average drawdown from the 52-week high for the components is still 37%, and fully 50%, exactly 50 of the 100 names in the index are within 10% of their 52-week low. So if we see another increase in rates, we get above 4.10% in the 10-year, then, you know, the Nasdaq-100 is going to have a really, really tough time. And owning either VOLQ futures or call spreads would be a great way to hedge that exposure.
Right, particularly in a day like today where the Nasdaq-100 is up so much, that protection was certainly much more inexpensive than it might have been perhaps last week.
Yeah, with the markets bouncing around so much last week, we saw VOLQ, the index, get up to 35. It's about 35 right now. It's a little bit lower today, but Jill, to your point, it's only a little bit lower, even though the market is doing so well. And that's because people realize that, protection's a little bit cheaper. Let's buy some now.
Right. And then, just your outlook for the earnings season that we're in right now. I mean, expectations are just so low. Perhaps some of this is already discounted in, and we just started earnings in earnest on last week with the big banks. What are your expectations as we go through the next 4 or 5 weeks here?
I think that actually we're going to get about what is expected. That is, I don't think the actual EPS numbers that we're likely to get are going to be that disappointing. What we're going to pay attention to is what the companies have to say, the commentary about the coming quarter and the next year. Because if they suggest that inflation is a real problem, if they're having a really tough time getting the raw materials that they need, or depending on the company, the employees that they need, then that's going to be the real problem. So the commentary is going to be much more important than the numbers, because I think we would have seen some downgrades or some warnings from the companies if they were going to miss substantially.
All right, Scott, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.